Hello friends, it's time for weekend review and it will be weekend review of week beginning 10th of August 2020. For disclaimer, please refer to my website chatvideo.com/disclaimer. In my previous weekend review, I had mentioned of a small black candle. I had expected support at around 10,850 to 10,890 mark. On Monday itself, the Nifty made a low of 10,882 and closed at 10,891. Thereafter, the next 4 days, it moved up. In the last 2 days, there was not major movement in the market, which resulted in small candles. As of now, the intermediate term trend continues to be up, but close below this low will terminate the intermediate term trend. At the same time, if we get higher highs and higher lows, the next swing might change the level where the intermediate term trend will change. Will it change this week? What will happen? Let's analyze one by one. Let's make a rising trend line, the line which you all are quite familiar with. The index more or less tested the trend line and was again moving up. The slope before testing the trend line was quite flattish in nature. By any means, it wasn't steep. If a trend line has to be violated, the steepness of the price fall should be quite sharp. Price fall with low steepness generally holds out and moves on the higher side. Moving on to the daily moving averages. Previous week, 200-day moving average provided support to the Nifty. Presently, the 13-week moving average is providing support and it is just above the 13-week SMA. These averages, and in particular the 200-day SMA and the 30-day SMA, will be crucial for the stock in coming days. On the weekly charts, the 100-week SMA and the 50-week SMA provided support to the index. On daily charts, in RSI, you may recollect the green channel which I had discussed in detail the previous week. I had expected that the indicator may reach levels of 49-50 odd levels. It reached the level of 52 and has moved up from there on. Presently, it is just around 62 odd levels, which as of now appears healthy. Staying on RSI itself, watch the right side of the vertical line. Price had made higher high, higher low. The RSI in the same time period has registered a lower low. This is called as advanced breakdown, or people do call it as positive reversal, hidden divergence, whatever be the name, is actually a signal that an uptrend may come soon, provided the low is not violated. And to confirm yourself, you need a short-term moving average which has to be crossed, and the short-term moving average should not be violated thereafter. I would have been happy if we had bigger candles. Well, in that case, that would have confirmed us. But all the same, if we do get momentum on the upside, we can coolly ride the uptrend. The ADX on daily chart has flattened itself out We had discussed that there was a probability of this coming up. Right now, no major signals is coming. As such, there is no signal of worrying also. The trend appears to be on the upside, the dominating DI obviously being the plus DI. We should consider that the trend is okay till proven otherwise. This is hourly chart of Nifty. Plotted on it is 14 period RSI. As you can see, a clear triangle is marked. The lower range for the triangle is at around 52 odd level, the higher at around 66 odd level. We need to be very clear which way it breaks out and what can happen if it breaks out. Let's say if it breaks on the downside and moves below the 59 mark as shown here, then subtracting 14 from this 59 will give me a value of around 45. If the breakout is on the upside, in that case, adding 66 to 14, which was the depth of the triangle, the value comes to around 80 odd level. As I had mentioned earlier too, that if we get a projection where RSI can reach levels of 70, 75, 80 or beyond, you can expect massive rise, which we saw in our previous weekend reviews, which we discussed here. Well, as of now, it hasn't violated any side. We will watch what comes up from here. Just for your information, you may visit chartvideo.com where a tutorial video of RSI has been posted, and those enrolling before 10th of August will be receiving a free supplementary video which will contain all clarifications and doubts which students have asked me during the course, as well as on recent market action. Do enroll yourself before 10th of August. On same hourly chart of Nifty, here is our ADX trio. Let us plot ADX on a separate window to get a better clarity. Here it is. As you are seeing, ADX had gradually cooled off and was not making higher high, higher lows, and rather right now has come down to levels of 13. This is called as ADX divergence. What does it imply? During that time, trade in the direction of dominant DMI and generally expect the move to be sharp in nature. Moving on to 30 minutes chart of Nifty, on which RSI is plotted, there too a clear triangle formation is visible. I leave it to you as a homework to check out the projections. In the next part of our interpretation, we will be going to open interest buildup. Now just watch here. From this day onwards, that is 29th of July, Nifty closed at 11,202. Friday's close was 11,214. So we can say that we were in a broad trading range if we filter out the noise. During this period, it will be interesting to note the open interest. Let's go to the table. This is the portion which I am talking about. 29 July, 11,202. 7th of August, 11,214. During this period, this was the change in open interest with respect to previous day. Well, some build-up did take place, but not in a massive way. You can say some accumulation has definitely taken place. Moving on to the put call ratio, which is presently at 1.6. It had climbed a level of 1.9 on the higher side, went as low as 1.10 and is presently at 1.6. The buoyancy of the put call ratio appears okay as of now. Nothing to worry of. Well, I did get some questions on this put call ratio where I felt that some clarifications needs to be done. This is put call ratio from 1st of July 2019 to the current date. As you can watch, in the month of July, August, more or less, put call ratio was in a value of zero point 0.8 to 1.4. On the Nirmala Sitharaman candle day, it had crossed this and went up. Thereafter, it continued on a upside movement, this which I say as a buoyant put call ratio. In the month of January, on 14th of January, we had the closing high of at around 10,360 odd levels. Put call ratio was at 1.68 in that time. Thereafter, it scooped low in a major way on the budget day in 2020. In the entire sell-off in February-March, put call ratio traded at very low value. Post the sell-off, put call ratio started moving up again, and as of now, buoyancy is clearly visible. Well, in case if we see it this way that the ratio is not moving up higher, falls from these levels, that can come as a warning something bad may come. But as of now, there is nothing to worry of. Just take it this way that the put call ratio appears to be buoyant. Well, finally coming to the concluding part, where can Nifty go? Where is it headed? बहुत तो बकली है भैया, ऊपर जाएगा कि नीचे जाएगा, साफ साफ बताओ. अच्छा, you have to have a stop loss in everything, so it is up to you to decide on the stop loss. If you are a very aggressive trader, Friday's low can be used as a stop loss. If you are a conservative trader, you can think of this particular zone as a support. Violation of this will be a stop loss. As of now, all studies point out this way that we may head upward. Gap is visible at levels of 11,500 odd. Let us for the time being target this particular zone. People do ask me about a brief guidance on Bank Nifty. Well, again I repeat, हम बच्चे हैं, क्या बोले बैंक निफ्टी के बारे में, वो तो बड़े लोग खेलता है. But all the same, the 13 and the 30-day SMA is at around 22,000 odd levels. If this is crossed on the higher side, another upward move may begin. The 50-day SMA is providing support to the stock, or here the index obviously, which is not a bad sign. One can keep a bullish view till the 50 period SMA is not violated, which is at around 21,550 odd levels. Well, that's it for today, and don't forget to enroll yourself for the RSI Vantage tutorial video. Bye. See you again next week.